Well, let's get more on the whole currency space, the dollar and beyond, with Mario Singh, who is Director of Training and Education at ForexPrimus.com. Mario, I was reading your notes, and I'm very, very worried about you because you seem let down by the lack of concrete action we saw from the G20. I guess why I'm worried about you is why were you expecting anything from the G20 when we've seen failure on WTO after the last 10 years? We've seen failure on climate change talks at COP15 and beyond. Why did you expect something from G20?
Well, here's the key thing, Steve. The main thing that every trader was looking at the G20 was there was some form of concrete measures on how they would deal with their currency devaluations or even their economic imbalances between the huge economies. That, in that sense, was a letdown. Probably the biggest sentence that came out of the G20 was when President Obama officially called the Chinese currency as undervalued. But besides that, there was absolutely nothing else. But what did come out was the fact that Ireland might be a possibility for it to default now on its sovereign debt.
Yeah, I mean, I'm just looking at some very interesting copy on the G20 from Reuters, and I like the first sentence from their chief economics correspondent. Economic power is leaching from the old world to emerging markets. Do you think this is why we're not getting coordination? Because the old world doesn't realise that that power is leaching away?
I agree with that. The key thing for all the economies to actually watch themselves now is the fact that it might go towards protectionism. Now, all of them need a weak currency to spur on exports. None of the economies are doing particularly well except China, who is really moving towards increasing their domestic growth. So until that happens, we will see all of them moving very cautiously. In fact, what has been happening is not so much an economic factor. It's more of a political factor in all these things, what's been happening on currency wars for the last 3 weeks at least.
If you think there was inaction at the G20 and also APEC summits over the weekend, you still have the dollar-yuan pair. So whenever the dollar weakens, so does the Chinese renminbi. And if that's the case, with the current account imbalances, we could get back to where the imbalances were pre-crisis levels, and that's going to be a matter of time?
It will be. What's going to happen, Chloe, at least for the next 2 weeks, the main big idea that's happening, at least in the Forex markets now, is that risk is off. And the main thing is because China had great numbers for their inflation. It came in at 4.4%. So when China has great numbers, the next step they would do is probably to raise interest rates.
That said, but if you, of course, the inflation number was high, 4.4%. But if you take out core inflation and food prices, then by U.S. or Japanese standards, the market shouldn't be getting so spooked by tightening, because after all, the Chinese did tighten numerous times during the last bull run. It had no effect on the markets.
That's true. But let's come back on the 4.4%. The main reason was because of food prices. Yes, it wouldn't spike so high if we remove food prices, but the fact that food prices literally jumped 10.1%, that gave rise to inflation numbers. Now, traders are watching that. So the key thing when China has spiked up such high numbers, it's going to be a risk off, because when they start cooling measures, when they start tightening, there's not going to be a lot of liquidity in the financial systems. And that's going to cause the euro, the sterling, and even the Aussie to be heading downwards in the next 1 week.
Mario, I just want to jump in here from Bahrain. It's Jackie, and I want to talk about some of the emerging currencies. We've seen the Taiwan dollar at recent highs and some strength from some of the other emerging Asian currencies. So what can we expect to see here in terms of the short-term outlook?
Well, Jackie, the main thing is all the Asian currencies, at least, they've got to sit down and dissect of what's been happening in the G20. And immediately after that, we saw how they got together in the APEC summit. So the main thing, we saw how Brazil, Indonesia, Taiwan, and South Korea, all of them are literally having, maybe call it taxes in terms of currency inflows into the country. So because of, the main reason why that is so is because of the Fed's injection of 600 billion. And although I think one of the key things, as I mentioned when I said that concrete details were sorely lacking in G20, what was good for all of the countries was that they did give space to say that emerging economies, especially in the Asia-Pacific region, they can take steps to help them to sort out the hot money inflows.
Thank you so much. And that was Mario Singh from ForexPrimus.com.